You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo. I'll be your host, your guide for this marching parade through the world of options. Hope you guys enjoyed. Sounds like a lot of you did. Our mega special. My voice still holding out this week, which is impressive given how much talking I've had to do this week. Remember, if you like what you hear for the special, for this show, for anything we do here on the network, keep those reviews coming on your platform of choice. It really does help new people continue to discover the network in these troubled times. We've all seen the explosion of new retail, Robinhood, and other platform options traders. We had Henry on our special saying there's 1 million one-lots hitting the market these days that didn't exist a year ago. Those one-lots have to go somewhere. They have to learn about those options things and volatility and everything else somewhere. So make sure they continue to discover us. Leave those reviews in your platform of choice. Keep those questions coming too, especially for a day like today. It's Thursday. We get to open up the mailbag a little bit, which is always fun. Let's see who else we're hearing from today. First, let's go out to a tranquil hamlet out in the hinterlands of Chicago, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. Have you recovered from the epic 4-hour election night special, sir?
I think I have. It's exciting, but it's something we continue to watch, which I'm sure we'll talk about today. And I got to say, I thought that we would have a winner that night, especially right after Texas and Florida were called in Trump's favor. So with that, I owe Dan Passarelli $1. Dan, I acknowledge that you were right, I was wrong. So I'm keeping up my part of the deal.
He already took his victory lap yesterday on Options Bootcamp, so I'm sure he'll be checking his PayPal forthwith, sir, for the $1, the Mortimer bet that is heading his way. Yes, he even admitted yesterday he would have given you like a whole extra day if you wanted to go, but he was surprised you took it at midnight. But yeah, it did seem like it was maybe trending that way for a while until, of course, it wasn't, and all sorts of craziness. We'll get to that in a second. First, let's welcome on other contestant here on the options prices right here, Mr. Mark Sebastian, the greasiest meatball, a.k.a. the guy from the land of the pit, a.k.a. the guy from deep in the heart of Texas. Mr. Meatball, welcome back to the program. A, and B, have you recovered from the epic 4-hour spectacular earlier this week, sir?
Well, I was lucky enough to be one of the last people on, so it was only about a 40-minute spectacular for me in terms of talking. The content was amazing all day, and yes, I am recovering. And, you know, I think that what we're seeing right now, and I'm sure we'll talk about this some more, is that now that it's over, the markets are back to this being America, stocks go up.
Yeah, pretty much. That's about as succinct a way to put it as any else I've heard as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what the heck is lighting up our screens, and it's just a sea of green pretty much across the board. As the meatball just said, it's America. Stocks gots to go up. And so they have indeed been going back up. As you recall, on the evening of our special, we were talking about 3,400 being a bit of a ceiling, bit of a barrier. We bounced off it, dripped back down in the S&P down to about 3,330 or so, I think, and change, maybe even a little bit lower. And then, of course, we rallied, and all of a sudden, futures are limit up. And everything was back green in the world again. And it's pretty much been that way, even though coming into today, we still don't have a president-elect here in the U.S. It does seem like it is trending in one direction. It does seem like Biden is moving ever closer to that elusive 270 electoral count number, easy for me to say out there. Coming into showtime, it looks like most outlets are putting him at about 264. Obviously pretty close, but close only counts in horseshoes and hand grenades. Trump at about 214. There are obviously still some legal challenges going on. There are still some recounts in many states. It is still too close to call or will trigger an automatic recount. So the notion that we're going to know right away probably has faded a little bit. Uncle Mike's dollar going right along with it. But none of this uncertainty has really seemed to stop the markets at all. If you remember, going back even to our special, it seemed like the narrative was shaping up of Trump doing well. Trump takes Texas. Okay, futures rally, limit up. He's winning in the betting outlets, everything. Like all of a sudden, Biden's looking good. The market was selling off. Now it seems like Biden is the horse to bet on in the race. And the markets are saying, you know what? The heck with it. The heck with 100,000 cases of coronavirus a day now. Let's just rally ho. We're north of 3,500 again in the S&P, so almost a couple of hundred handles north of where we were on the nadir of the election night special there. Up another 2+% today in the S&P, about 2.15%. The Dow, actually the laggard today, only a meager 1.9%. And the NASDAQ roaring ahead, up nearly 2.5% today. And of course, all this means a lot of that vol we were pricing in on our last show on Monday has gone the way of the dodo. What were we saying on the election special? What did I say? I think I said we were going to be at about 27.5. It took a little bit, maybe an extra day to get there. Of course, that was with the caveat that we would know an outcome. We obviously did not know an outcome. So we got there. Just took an extra day, right about a 27.70 coming into showtime. Puts us up, or I should say down, about 10 handles from where we were last show and far away from the high we hit not too long ago of almost 41. In the VIX cash, about 40.70. Our old friend VVIX taking a break as well at about a 118 at the start of the show. That puts it down, a whopping 23 handles from where it was on our last show, and down even more from the high of 154 it hit not too long ago. VXX, a product that seemed like it really didn't have much time at all for this election bump. It kind of rallied a little bit, but we talked about on Vol Views how that bump was kind of anemic. It seemed like it was just wanting to get back to the downside, and now it is back again. Coming into showtime was at about 21 3/4, down about 4 handles, and well off the high it hit of 27 3/4 as well. And that was even a pretty anemic high if you look at what VXX was up to. And our newest addition to the Vol space, aka Vol Q. By the way, if you want more about VolQ, you're going to get into it a lot more in a little bit coming up on TWIFO, so stay tuned for that. 29 1/4 coming into showtime puts it down, about 8.5 handles from where it was on our last show, and a little over 10 handles from its high it hit intra-week of about 39.82. So it threatened 40, didn't quite get there, but it got pretty close to there. All right, a lot of things to unpack. Let's go back around the table, the opposite of the way we came. Let's start with the greasiest of Texans. Mr. Meatball, sir, I know you were joking. You said it's America. Stocks have to go up, but it's about as good a reason as any for this protracted rally we're seeing out here. What's been lighting up your tape, sir?
Yeah, I think what you're looking at is markets like gridlock. They like the status quo, and no matter who wins, they're going to have a mixed government. The House is, even tighter than it was. And it looks like the Senate is going to basically be unchanged if you look at the way things are kind of shaping up. And so, you're not gonna see anything really out of the government with, a blue wave or a red wave or anything. It's just going to be 4 more years of very similar to what we've had the last 4 years. Minus, I'm going to say that, if Biden ends up being the president, I'm going to say he does have a slightly different disposition, and he carries himself slightly differently than our current president.
Going out on a limb there with that one, sir. Yeah, probably not quite as...
Yeah, I am.
Probably not quite as in your face, you're right, as our current occupant there of the White House there. All right, Mr. Uncle Mike, sir, this is not just an Uncle Mike day. It's been an Uncle Mike post-election week here. Just freaking, I think I saw the stats the other day. This is the best post-election day the Dow has had in over a century. So break it down however you want. This is an Uncle Mike kind of week. What is lighting up your tape out there today, sir?
Well, wish I would have had more deltas on the table because I got cautious before the election, but that's life. A couple of things that I'm noticing. I agree with Mark, and I think we were talking about it even on the election night special, in that I think the question was posed to all of us, what do you think the VIX will be if we have someone elected tonight? I think my answer was it depended on, because I think at the time it looked like the Republicans weren't going to pull off a miracle in the House. They gained some seats, but they didn't. The Democrats still had control of it, and we didn't really have any information on the Senate or the presidency at the time. But I just remember thinking, I'm like, well, if we have gridlock, then that is typically a good thing for markets, and it makes it so that politicians can interfere slightly less when you have gridlock, meaning a Republican president and a Democratic Congress or vice versa. And if we have the Republican the Republican Senate, Democratic House, Democrat or Republican president, we have that. So that is one reason for the rally. And my other theory as to why we are rallying is that I believe that at least the start of this was short covering, because I'm willing to bet that there was at least 1 or 2 shorts out there going into the election, just taking a flyer in that, thinking, okay, if we have chaos after this election, there's a lot of reason to believe that there was chaos. Let's just be short. And when it looks like at least we're not going to have chaos, then I think there was some people covering their shorts, or the fact that we had dipped a pretty decent amount going into the election, people were covering their shorts just for taking profits. So in terms of where things stand right now, it still is, in theory, Trump can win, but it's really not likely. And if Biden is declared winner in 2 of the states, then Trump's really going to have an uphill battle in his lawsuits. If Trump is declared the winner in Nevada, Georgia, North Carolina, and Pennsylvania, and that's the case, then obviously he would be considered the winner, of course. But if it is to the point to where Trump wins 4 out of the 5 of them, and he's able to sue in 1 state, then we may have the chaos that we were thinking about. We may have a Bush-Gore repeat. But in order for that to happen right now, Trump's really going to have to draw to an inside straight for that to happen. Biden just has to win 1 of the remaining states that's out there. And if that's the case, then it's really going to be tough for Trump to do something. And if he sues everybody and goes the lawsuit route, which he said he will, then if he has all these states and it's based on just 1 state, then I think we could have the Bush-Gore repeat because of the fact that that's the way it was in Florida in 2000. But if Trump needs 3 more states to win and needs recounts in 3 states and lawsuits to win in 3 states, then I think people are just going to ignore him, and Biden's going to be the winner at that stage. So that's kind of how I'm looking at things at this point in time. It ain't over yet, but it's really, really Biden's leading by 28 points with about 4 minutes left to go in the 4th quarter.
Yeah, I was saying this is the equivalent, but Trump's chances are essentially the chances of like the 2000. In order to win, he needs to basically pull a 2004 Boston Red Sox, because it just does not look that good for him across the board. But one thing that's interesting, I think we did bring this up on election night, was, people forget Joe Biden and Mitch McConnell are like really, 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 really good friends. And, they've been buddies for a very long time, spent years and years and years in the Senate together, hanging out. When Obama and Biden and Boehner couldn't get a deal together, Mitch McConnell and Joe Biden sat down and got a deal done in about 3 minutes, as last I checked. So I think people that think nothing is going to happen over the next 4 years, if Joe Biden gets in, could be surprised, simply because the opposition and in the Senate has a pretty good working relationship with the White House, which is the opposite, I would say, of the opposition in the House relative to the current president. I don't know about you guys, but I'm going to go out on a limb and say,
I thought Pelosi and Trump were golfing buddies.
I don't know that they like each other very much. I thought Schumer and Trump were pals, but apparently that is not the case anymore.
I don't think you're allowed to be a card-carrying Democrat and be pals with Trump these days. Those two are mutually exclusive. Speaking of mutually exclusive, you're going back to earlier, Mr. Uncle Mike, about how the market likes gridlock, and that's part of the reason why we're seeing this rally. And I've said it many times here on this network, and it always brings a smile to people's face, but it is true. I think the more protracted and prolonged exposure you get to the markets, I don't care what stripes you had coming into it, if you were super right, if you're super left, something in the middle, it tends to beat a bit of a libertarian streak into you. You kind of say, you know what, hands off my markets, you guys kind of screwed up, so the less you touch it, the better. And that is exactly kind of what we're seeing and collectively reflected in the markets right now. Hey, gridlock. That means hands off our markets potentially for another 4 years. Okay, rally ho mode, in spite of the fact that, hey, 100,000 people a day getting this pandemic and all sorts of other fun. So let's forget about that. Let's whistle right past that graveyard again and just keep the rally moving. Let's see how this rally is impacting the paper out there and the options flow, which I didn't even get a chance to get to. Maybe I'll see if I can pull it up in a little bit here. The numbers we saw out there, because the OCC numbers came in right before our big election night special. I'll see if I can squeeze those in a little bit. But first, let's see what's lighting it up right now. As of a few minutes ago, VIX was doing decent paper, 301,000 contracts. That's almost its ADV from a couple of weeks ago. Remember, it was threatening 300K a day there for a while there, which is not good numbers for the VIX. It's up to about 5.5 million, or 550,000. 5.5 million would be something. 550,000 a day out there in VIX land now. So decent paper on the tape, not a ton. SPY at about 2.5 million. That's more than half of its ADV, which is just a tick under 4 million contracts right now. We got the S closing in on 716,000 contracts. That ADV pretty much exactly a million out there right now. The Q's 1.05 million on the tape right now. Their ADV is about a million, so the Q's on fire. Not surprisingly, the NASDAQ is just off to the races yet again, which is funny because on the one hand, a lot of loggerheads between big tech and the Trump administration, but on the Democratic side, they're not exactly too friendly either. They did just push through Congress some antitrust legislation against Google. They just marched all of the tech CEOs before Congress in terms of having to testify and everything. So not exactly friendly on either side of the aisle, yet NASDAQ feeling the lift pretty strong today. Small caps also doing some paper, 456,000 contracts on the tape, the ADV 615 out there. So small caps ticking up volume-wise. Let's look at the top 10 most active single names, what the individual stocks you guys are trading options on today. Looks like mostly some familiar names. Number 10, AMD, 208. Cost you 208,000 contracts to break into the top 10 today, listeners. That's pretty impressive. Number 9, Qualcomm, 221,000. A lot of chip action going on out there today. Number 8, Amazon. About 250,000 contracts on the tape. Number 7, Bank of America, 263,000 contracts. Number 6, good old Softy, 293,000 contracts. Number 5, now we're over 300K. That gets us to Facebook at 303. Number 4, Baba, jumping up again over 400K to 427,000 contracts on the tape. Numero Trace, Tesla. Once again, Tesla bumped out of the top 2. It's happened a couple of times now. You know what only thing that could bump it out really is pretty much another version of itself. Yep, it's NIO at 731,000 contracts for number 2. Number 1, Apple, managing to retain its number 1 spot today at about 1.4 million contracts on the tape. I'm looking for the most biased paper we have in our top 10. Looks like it's a tie between Qualcomm and NEO. Both of them have about 72% of their paper coming on the call side of the ledger today. You know, so much fixation on macro. Let's go a little bit smaller. Let's go out to earnings season. People forget this is the biggest earnings week of the calendar. Over about 2,250 names or so of the 8,500 big names everyone tracks are reporting this week. So the biggest, most active week by far. A lot of that kind of got lost in the election noise, but there are still some big names popping off, including yesterday we had Qualcomm, Hilton, Upwork, Match, and Marathon Oil. Today we have Alibaba, GM, Papa John's, I like the ticker, Pizza. And after the bell today, we have Square, Dropbox, Peloton, Roku, Uber, EA, a bunch of names out there. We do have some earnings move results reports. Remember, you can check these for yourselves. You know where to go. TheOptionsInsider.com is the place to hang your hat. You can't beat the price. It's all free, courtesy of our friends over there at Oratsland. Let's start in Qualcomm. They popped off yesterday after the bell. They closed at about almost 129 out there on their stock. They were pricing in 5.4%, and they delivered 14.2%. So a big bang, a big move, a big outperformance there for Qualcomm, which is not the norm. If you've been following any of this data for pretty much the entirety of 2020, and we have, you know, underperformance is the name of the game out here, and Qualcomm bucking that trend. Let's see if BABA followed suit. BABA was popping off before the bell. They were at 295.71. They were pricing in 4.3%. And as of this report, they had delivered about 4.8%. So pretty much in line with what they were looking at. Let's see really quickly if they're still moving out there, if they've moved, and 289.5. So actually, yeah, they have pretty much gained back some of that, so they've moved even less now. So underperformance, kind of the name of the game out there. Let's go to Pizza, a.k.a. Papa John's. They were before the bell today as well. They were at 76.11 going into their earnings. They were pricing in 6.6%. They delivered, get this, 6.7%. So almost a perfectly priced straddle out there. Let's see if there's any surprises on that front. No, they're pretty much right about 81.5 still, so right about almost exactly in line with that straddle. Match Group, we've been talking about them a lot on the show lately. Remember, they're the kind of infamous sizable line in the sand puts that I've been breaking down with the Rock Lobster now for a couple of months. You saw them go up for size in September. They worked out. They went up again in October. Kind of worked out again, it seems like. Let's see what's up out there right now. Match Group coming into their report, they were at 128.69. They were pricing in 8.1%, and they delivered 5.6%. So, yet again, underperformance, the name of the game out here in all things earnings this week. Let's see if we can find a few more out here. Let's go out to some interesting sec. Let's go out to SeaWorld. Ticker symbol C's. They were on before the bell today as well. And let's see, they were at 23.36 when they went into their report. They were pricing in 9.2%. Pretty hefty straddle, and they delivered about half of that, a little over 5%. So, a little light on the earnings vol front. They're still pretty much at that level right now. So, yeah, interesting stuff. The season is shaping up a little bit differently than it has in seasons past. They were, they so far were at about 96% in terms of how much vol was priced in versus how much movement has actually been delivered in the post-earnings amount. So actually pretty close to 1-to-1. This is the closest season we've seen yet. But then again, it's just kind of getting rolling, so we don't really have all the numbers by far. You can check all that out for yourselves, the earnings move results, and the earnings season reports for free. You know where to go, theoptionsinsider.com. Let's check really quickly on some of the numbers we got coming out from our friends over there at OCC. Let's see how this crazy election volatility and everything else has been impacting options. And spoiler alert, it's yet another kind of record-breaking number out here. October volume up 41.1% from a year ago. Remember, OCC takes the other side of all of your options trades, so they have a good handle on how many things are being printed out there right now. Total OCC volume in October, 636.7 million contracts, up 41.1%. The highest October on record, so in the history of the business, and the fourth highest month this year. So not quite breaking the top three, but pretty darn close. Year-to-date ADV, that's 28.8 million contracts. Now that's up, get this, listeners, 46.3% from October of last, up nearly 50% in ADV from a year ago. That kind of reflects what the Flowmaster was saying on our special, how these one lots and these small retail trades are just flowing in for size out here in terms of just everyone and their mother trading options out there these days. Now, OCC clears a lot of stuff. Let's break it down a little bit more. Options, that's where we like to hang our hats. Exchange listed options volume, 633.3 million. That's up 42.4%. Let's drill down a little bit further. Equity options, that was 597.9 million, up 48.5% from October of last year. Cleared ETF options, that was 194.7 million. That's a 17.9% jump from last year, and then we keep kind of dropping it further as we go down the buckets here. Index options has been another one that's kind of been a dark spot for a while here, and continues to be the case. 35.4 million contracts worth of index options, a 15.3% decrease. That also probably reflects some of that retail flow, because they ain't trading SPX, even though Henry did allude to some weird and mysterious one lots in the SPX, and I kind of want to dig into that a little bit as well. Year-to-date ADV is about 28.6 million contracts. That's a strong number. Futures, another area where not exactly a bright spot. OCC, pretty much the only future left that they clear are VIX futures. Remember, the Bitcoin futures from SEBO went the way of the dodo. So we have total futures volume was 3.3 million contracts. That's nearly 50% decrease from October of last year. So mostly bright spots, a couple of the dark spots. Mr. Meatball, Mr. Uncle Mike, any of those numbers from OCC, or perhaps any of those earnings numbers I just rattled off, any of those come as surprises to you, gents?
Not really, but none of that is good for the SEBO, right? Because the index option decrease is almost straight out of VIX, right? Like we talked about on Volviews, right? We've got lots of put buyers in VIX, no call buyers, and the same people that buy calls are the same people that use VIX futures, and they're not, because the VIX is staying in the 30s. The CBOE, the SEBO Global Markets, sorry, I'm not allowed to say CBOE anymore, is openly rooting for the VIX to go back to 12. I mean, they should be at this point, because it gets its use case back. Right now, the only paper we're seeing is inputs, and so you do have retail paper in there, but they're buying puts on VIX, or as Henry said, they're buying short-dated expiration calls, trying to catch these 60, 70-point days on the upside.
Funny you should mention our friends over there at CBOE Global Markets. You're right, because the numbers coming out of them, not exactly gangbusters out here. They had a total market share. Remember, that's how much of overall options volume they control out there. 32.4% for Q4. That sounds like a commanding amount, but it's down from about 39% this time last year. That obviously reflects more paper shifting away from the products that are proprietary to SEBO, like SPX and VIX, and into the multi-listed contracts like your Apples and your Teslas and your Googles and everything else that trade pretty much everywhere. And SEBO pretty much reflected that and acknowledged that in their report. Their share of multi-listed options decreased to about 29% compared to about 32.2%. So more volume as more of these retail folks discover options are flocking not into SPX and VIX, which are kind of where the big dogs like to hang their hat, but instead out to the Apples, the Teslas, which are still expensive, but are multi-listed, and you could trade some smaller stuff against it out there. So you're right. Clearly none of that reflecting well over there on SEBO land. Let's see what's reflecting well on the options front as we get a little weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild. Mr. Meatball, the Rock Lobster is always bugging me to go back and review some of these trades that we profile here on the show. So we're going to kick things off reviewing some PepsiCo. Can you handle that, sir? Do you have your way back pants on?
I'm always wearing Rarely am I wearing pants, but when I do, they're way back pants.
Yes, you do like some throwback bell bottoms and some other things in your fashion repertoire over there. I'm going to kick things off, listeners, like I mentioned, in PepsiCo. Ticker symbol PEP. Put a little pep in your step with some caffeinated beverages like I'm doing right now here in the studio. And I did a lot during our special to keep me rolling there. At the time, we're going to dial back our Wayback Machine to October 1st, so not too long ago, a little over a month ago. At the time, we profiled a 10,000 lot of the October 142 calls going up for $1.06. It was a pretty tight market. They were $1 at $1.07. They went up right off the offer there. And let's see. At the time, the stock was 138.70, so it was about 2% out of the money. Worth noting, they had earnings that day, so it was kind of a bit of looks like a post-earnings overwrite out there or I should say post-earnings call love, really, in a little bit of PepsiCo. It was trading a lot of volume that day. It was the second highest volume day out there in terms of how ORATS likes to break it down, their volume versus their average volume, and they were pretty much number 2 on their list that day. So PepsiCo was trading it up as a result of their earnings. And this one is kind of a bit of a heartbreaker if you break it all down. By the way, spoiler, you want to know where they're trading right now, listeners? They were at 138.70 when this trade went up. They just ticked. They're exactly at 138.70. Again, so a whole lot of nothing, but actually a lot more unfolded during the lifespan of this trade. This trade actually worked out pretty well. This went up on the 1st. The stock kind of took off shortly after this trade went up. By a couple of weeks later, it was trading 143.5. So it had moved pretty good. Remember, these were the 142 calls. So they were trading north, $1.50 north of that strike. So you know that $1.06 they paid for these calls was looking pretty good. These things were trading at a bunch of prices, obviously much north of $1.50 for a while there. And so you think, okay, great, this guy did all right. He got a move that he wanted, and you need it to happen pretty quickly, obviously, listeners, and he got it pretty quickly. So he got what he needed. But it looks like apparently this person maybe got a little greedy, decided not to close it out, because the stock ended up turning back around a little bit, and guess where it closed on expiration, just to make it even more painful. It closed at 141.73. So it was just flirting. It was just kissing the strike at 142. And as you might expect, these calls still open on expiration. So our friend here went from a pretty big winner, it seems like, to dropping about 1.06 million and watching the stock hug his strike just as an extra degree of mockery. So perhaps a little bit of a lesson here. You get your wham bam, thank you ma'am, early on in your options life. Maybe you at least take some of it off to ease the pain and get rid of your outlay there so you're looking all right. And in general, we say it before, we got to do some stuff when the stuff happens. Mr. Mr. Meatball, is this your takeaway as well? Do you concur that this is a heartbreaker of a trade that flirted with success until it dived to dismal failure, sir?
It's what it sounds like. I mean, but again, we don't know what the other side of the trade is, right? So who knows? That's why maybe they didn't do anything. But it definitely feels like it was an all-for-naught trade.
Yeah, we could certainly assume that this guy was diligent and he did some aggressive gamma scalping, and maybe he paid for some or all of it. Maybe he had an offsetting position somewhere else. We obviously don't know all the different levels that went into this trade. We just look at the options leg, listeners, and from that perspective, yeah, kind of heartbreaking. It didn't. And even if you had something else on, when things are going your way pretty good, you take some of it off just to make things work out even better. But apparently not. So it's not just you, listeners. It's not just you who lets good trades turn bad. It's more sizable ones out there as well. Next, let's go on to ANGI Home Services, ticker symbol ANGI. I believe these are the ones who own Angie's List and a few other types of things in this kind of home services / consulting type arena out here. This stock, ANGI, trading right now $11.48, off a couple of cents today, but not a big day today. A year ago, this was trading $6.73, so they've had quite the year. And this name, unlike everything else, didn't really get too hammered during the big sell-off. I mean, it sold off to about $4.10, so it took a drubbing. I mean, it took a hit, but then it pretty much turned right around. It was trading back at 6.5 again by the mid to end of April there. So it had pretty much regained all of its losses and then some by then. So it recovered faster than pretty much the rest of the market. By the time we usually say most of the market peaked, right around June 8th, it was trading 12.5. So it got a nice return very quickly. And then it rallied even further, got up to about 16.5, tipped over 17 ever so briefly in the middle of July. So it looked pretty good there. And then it seems like the weight of this kind of just overwhelmed it, and it kind of started trending back down again. By the end of September, it was trading $10, so it had given up quite a bit of that $17 price it had just a few months earlier. And now kind of hovering in this 10 to 11 range. It spiked up, looked like really quickly, to $12.75 about a month ago, and then it kind of gave that up again very quickly. And it's kind of been hovering in this around 11.5 range for the better part of the last month, where we find it right now. So what does our Eye of Sauron have for us today? Let's see. It is some call paper, and it looks like someone perhaps doing a little bit of size overwrite and deciding, you know what, this little bit of range-bound trading for ANGI ain't done yet. It's going to extend at least through December expiration. It was a 15,000 lot, so pretty sizable for this name, going up on the D's 12.5 calls, so pretty much exactly $1 out of the money calls. And they got 80 cents for these, too. It's impressive. They were 75 cents at 90. They actually got a nickel better than the bid for 15,000. That's pretty impressive. Shows that real market, obviously, a wee bit tighter there. The stock was at 11.43 when these went up, so about a dime lower than it is right now. Worth noting, they do have earnings today after the bell, so this could be a bit of a change of narrative. If these numbers come out and they're strong, then maybe this guy could have his, probably has some stock, and he probably have it get called away, but I'm guessing he's not too mad if he gets called away at an effective price of around $13.30 when the stock's at 11.5 right now. Mr. Meatball, is that your takeaway as well? Looks like a stockholder maybe trying to harness some of this earnings juice to get a little bit of a juicier overwrite, and are you impressed that they got 15,000 off a nickel better than the bid, sir?
I think that's impressive. I'm going to guess that they had that the trader had the other side matched up, and that they probably paid their broker a pretty penny to get the whole thing done at that price. But yes, I think this feels very much like like an earnings premium sale.
I think it was your buddy Tubby there who had the other side done. He got that execution. That looks like his deft hand, sir. What do you think?
Well, it could be totally. It feels like a Tubby trade, doesn't it? Feels like a Tubby trade. Although, if you look, a lot of what he does is like 100,000 expiration calls in like bank stocks to deal with fund rebalancing and things like that on expiration. It's crazy, some of the stuff that you should have him on one of these times and ask about some of the flow if he's ever allowed to speak publicly again. He might not be.
Funny, you should say that. Mr. Tubby and your friends over there at Matrix, maybe making some appearances on Volviews coming soon. So stay tuned.
Oh, nice. Stay
tuned for that as we move on into our final name here. Let's go to SunPower Corp Class A. This is ticker symbol SPWR, obviously the Class A stock here for SunPower. This is obviously solar power, photovoltaic cells, all that fun stuff out there. Trading today, $18.85. Good day for them, up 2.25%, nearly almost 14%. So a good run for them. Let's see, they must have had earnings right before the bell here today or fairly recently. A year ago, they were trading, get this, $5.58. So yeah, quite the run here for SunPower Corp. And they kind of hovered in that range for a while. Then the great sell-off came, and they only really went down to about $4.03. So they didn't take a big drubbing, even though everything else on the planet really did. And then they kind of slowly rebounded. By June 8th, which is the nadir for everything else, they topped out at $5.84. So they had gained back what they started the whole year with and then some. And then they kind of kept rallying. By the time July 16th came up, they're actually trading 6.5. So they managed, unlike most of the names we talk about, they managed to fight back past their June 8th high again. They topped out at nearly $12 on September 1st, sold off a bit again, then rallied again, another big strong rally, up to a high of looks like we'll hit about 1733 in early October, and then they sold off again, and now they're up to pretty much their high right now. Well, they hit 1982, it sounds like, earlier today. Now they're at about 1882 out there. So it's been a good run here for Sun Power, over 3x over the course of the past year. Let's see. They had earnings on October 28th, so that explains some of these recent spikes we're seeing out here. Let's see what our Eye of Sauron found out here. Given all these recent rallies, maybe someone deciding, you know what, I want to lock in my gains, and doing it in an interesting and meaty fashion. We've got the Jan 20 puts. Yes, 20 puts, so $1.20 or so in the money puts, going up 11,454 times for a whopping and a meaty $4.30. So that's pretty much lifting the offer. They were $4 at $4.30 when these went up. The stock was right about $18.41, so a little bit shy, about 40 cents shy where it is right now. So, and there are earnings again, but not in the lifespan of these options. The next earnings announcement is on the 10th of February. So this is a near-term hedge / dump into some stock, but not through earnings, which is interesting. Mr. Meatball, what's your take on this use case for pretty meaty puts, buck and change in the money puts versus your traditional, let's say, 2 to 5% out of the money put, which is usually where we see the hedges go up. And then B, what do you think our friend is up to out here in SunPower Corp Class A?
I'm going to say these are meaty, very meaty. You might say they're beefy. They might even qualify as meefy. These are some of the meatiest.
I don't know if they make that. That's a high bar to clear to qualify for meefy. You got to be at least, I think, $8 worth of premium to be meefy.
These are pretty darn meefy, though. For a name like SunPower, I mean, you're buying a put that's what, 25% of the value of the stock. It's pretty impressive. This appears to be, I don't know if SunPower is hard to borrow or anything like that, but this definitely could be somebody trying to, get synthetically short and or maybe dump out of their stock at a specific price, and they only want the stock if it really rallies above 20. That would be why you might do something like this. But, given how in the money they are, this could be just a simple de facto, way of playing short stock.
I'm looking here, and yes, they are short sale restricted. So that would certainly give a little bit more reason behind why they are willing to buy such meefy, as you put it. A term I'm not familiar with. I do believe you coined that. Meefy puts out here. So you know what? That makes a little bit more sense as to why they might want to gobble these bad boys up. We'll keep an eye on these. We'll come back to these. And if you don't understand why short sale restricted would give a bid to the puts, check out some of our earlier shows we did on this show. We just talked about this recently on Options Bootcamp, I believe, as well. So check out some of those to explain all that fun stuff for you. As we keep on rolling, it's time for you guys to take the reins. Uh-oh, I'm scared. It is time for the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right. Welcome to the Mail Block. You guys take the reins, your questions, your comments. We asked you guys some questions earlier this week, too, including one during our live election night special. I was fascinated at just how tight this poll was and remained pretty much the entirety of the evening until it expired, which I guess reflects the sentiment in our country. We are very clearly divided when it comes to political choices, and you guys were very clearly and evenly divided when we asked you on election night, do you think we'll have a clear victor? And we gave you 3 choices: yes, definitely; no, it'll take days; or I don't know. And 44.8% said yes, definitely. 47.1% ended up taking it with what turned out to be the correct answer: no, it will take days. But that even was probably about the widest we saw it. It was neck and neck within a fraction of several times throughout the evening when I checked it. They were both exactly equal percentages, which is a little bit eerie when you think about it. And about 8% saying, I don't know. So yeah, you guys kind of as split as we were here on the panel, including Uncle Mike, threw a good $1 away on such wagering. Speaking of the election night special, we got Jay 4340 chiming. I do believe he's our regular foodie, sends in all sorts of food recommendations and explanations. He said, thanks for the election night live show, guys. It was a lot of fun and made watching, in parentheses, but not listening to the news coverage bearable. Thanks for being a sane voice in a crazy time, and thanks to all your guests as well. Best analysis of the night. Well, thank you very much, Jay, and everyone else out there who expressed similar sentiments. Yeah, that's what we tried to do. We tried to make it a sane repository. In these kind of insane times, it's kind of hard to find that. You turn on any different channel or any different website, they're all coming at you with whatever agenda they have, and it works for them. It makes a lot of money getting people all riled up. And so we thought, let's be the opposite of that. Let's try to talk you off the ledge, provide some sort of sane resource. And the use case he described is exactly what we planned. Hey, you can leave your shows on, just mute them, and turn us on so you can listen to us while you watch something else. It's a perfect use case for our election night special, particularly as it went on, clearly nearly 4 hours. So thanks to all of you who enjoyed it, who wrote in, who listened, who had a fun time out there. We appreciate all of you as much as you appreciate us doing it. In fact, I might even go out on a limb and say maybe even a little more. All right, next up, Relja. Relja wants to know, do you guys offer a subscription? Well, funny you should ask that, Relja. Not really yet, but we get this question a lot more these days, as you might imagine. People want to do something extra to maybe support the network, or maybe they want to just get out there and have us offer some sort of premium type programming. And we considered that since the beginning. I never really saw a use case that made sense, and I thought maybe something that offered something, an additional added value beyond what we talk about here all the time on the network. But it seems like some things like that might be starting to shape up. So stay tuned to that front. Nothing to announce just yet, but I think there might be something for all of you out there who are always asking, hey, how are ways I can get involved in the network? How could I support it? You guys do great content. We want to thank you for that. So we are brainstorming some ideas along that front. So Relja and everyone else who has questions like that, stay tuned. All right. Oh, we got our regular questioner in the chat here. Remember, if you guys listen live, if you ask questions in the chat, you get bumped up to the top of the list because we like you guys a little bit more than everybody else. I'm just kidding. We like you all equally. But Tony Weber, frequent question. He wants to know, you ever put a trade on to play the Fed decision? Market seems to drift down after. Those days, a little less exciting now than I think they were a year or so ago. Not as much juice in that Fed decision. I don't know. Uncle Mike, sir, are you a big fan of putting on trades to play the Fed decision, sir?
Can't say that I ever have. I like boredom. I don't like excitement in trading. Trading's exciting enough when it's boring, so it's not my thing. I know a lot of people that do it. I'm just more of the type that likes to just quietly all of a sudden having a boring account or whatever, and then all of a sudden one day it's up significantly and wondering what the heck just happened there. I kind of like that more than anything, and just for playing exciting news and that type of thing, it's not me. I like just doing my thing and taking small little gains, and then people don't look at it for a while, and then all of a sudden like, whoa, what happened here? That's my MO.
Mr. Meatball, you're out there managing money. I think the heydays of the Fed trade may be behind us for a little bit, but are you putting anything on around FOMC, which we just saw again this week, kind of a bit of a whimper?
Not recently, just because there's really been, it's not been the headline. It's not been something where people, where it's been a good trade. But back in the day when you weren't sure what they were going to do, when there was not some lack of clarity, when, markets were positioned one way or the other, it was a really fun way to try and make some money that just currently is not there right now. So no, the Fed is, the only real way to try and play the Fed is maybe in the bond market in, something like TLT. But even that's been, I think a little bit more boring lately. Yes,
indeed. Speaking of boring, someone came a little while ago. I've kind of held off on it because it's not really my area of enjoyment. Big Ted wants to know, any thoughts on the Biden tax plan and how it treats 401k contributions? Will this hurt the options market and brokers, and he includes a link to the Biden's tax plan. Again, this is not exactly. I'm not a CPA, not a tax guy, and it seems like the Biden tax plan may be in favor right now because he's closing in from an electoral perspective. I don't know, Uncle Mike, you guys on the advisor side have to pay more attention to these types of tax stories. Have you done any due diligence on this yet, or are you kind of waiting to see who wins before you bother? Mr. Uncle Mike, are you excited into muting?
My Mark,
apologies. I'm muted.
Yeah.
Normally I'm not. Normally I'm not much of a muter, but in this case, I did. So with the Biden tax plan. People say, like right now, that it's skewed towards, that the current contributions are skewed more towards the rich because of the fact that, let's say a guy that normally pays taxes he normally pays, I'm just making up numbers here, $2,000 a year, whereas the average Joe pays $1,000 a year. Well, the rich guy is going to get twice the deduction for putting money in his 401k than the average guy because he's in such a higher tax bracket. And so what Biden's proposing is he wants to, I'm using air quotes here, equalize these benefits, which they're talking about giving a tax credit to the lower income earners. Now, whether that's good or not, I don't know, because of the fact that I don't know what else is in the fine print. And so that's kind of the initial thing that people are talking about right now. But the rest of it I have not looked at as of yet. But I think with that, I'm not sure if that would be good or not, just because it's a lower income tax credit to people with lower income. But with anything, there's always going to be catches that that are with it. So make sure you read the fine print, which if Biden wins, I guarantee you I will be. But that's the initial gist of it.
There you go. Uncle Mike, he gets to chime in on the tax ones for us. Really quickly, you're kind of run up against it. Got another one coming in from the live chat. My boy Luigi, I like the hand. I recognize that handle. I like to see some of the regulars popping in there every now and then. We have people from all over the world in that chat recently this week. We love all of you. Good to see some regular names popping in there as well. My boy Luigi wants to know, when you mention hitting the bid and lifting the offer, what do you mean? Catching those prices? Exactly. Yeah, that's pretty much what we mean there, Luigi. Let's say you go out to see an option and it's listed 95-cent bid offered at $1. If you're hitting that bid, you are selling however many contracts you have exactly on that bid price. You're selling them for 95 cents. You're not working it at 96 or trying to split the difference at 97 or 98, anything like that. You're hitting the bid. It's posted a bid for 95 cents for however many are listed out there on the MBBO, and you are hitting it for however many you want to trade. Doesn't mean you're going to get all of them off if you want to do 10,000. That's why we're talking about all these size trades, sometimes trading through the bids or around the bids or through the offers. But if you just have like a 10 lot to go, you should be filled. That said, people have been writing into us with some weird questions lately about, hey, I'm not filled on this and I'm trying to hit bids and lift offers. And that's kind of strange to me. And I need more details when people send us that, exactly what they're up to. I'm assuming they're probably trading spreads, which is where those issues tend to come in. But if you're trading single legs and you've got a few contracts to go, like a 10 lot, and you're trying to, let's say the other side, lift the offer. So in our case, we're offered at $1. You're trying to just pay $1 for your 10 lot or whatever you got. And in that case, most of the size you guys probably want to do probably should be filled and filled pretty quickly. If you got to do like 100, maybe not. But if you're trying to do like a 10 lot on some of these things, you probably should be filled out there. So yeah, selling at the bid price, paying the offer price, not messing around in the middle. That's what we mean by hitting the bid and lifting the offer. As we head right into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, where we tell you what we're watching for the rest of this week. Really quickly, we got some election stuff, obviously, to keep an eye on. But on the micro front again, we still have some big names popping off after the bell today. Peloton, a name that probably couldn't have benefited more from this pandemic. They're at $118.60. They're popping off after the bell today. They're pricing in $10.98. In the past, they moved $11.61, so a little bit lighter. But again, if past is prologue on the earnings front, that's probably the smart play. Roku also after the bell today. They're at $215.68 as of this report. They were pricing in $19.32. Get this, listeners. In the past, they've delivered $41.50 $1.23. We know Roku's a volatile name. You know it's been in our top 10 for a while, and it delivers some vol. So they're pricing in some pretty light juice in Roku land. Maybe one worthy of watching out there. Square after the bell as well, 171.29 is where they were as of this report. They were pricing in $11.88. In the past, they moved $10.02. So a little bit juicy on the vol front. And Uber, another name you guys like to watch, $40.99. They were pricing in, $2.45. In the past, they've moved $3.01. So a little bit lighter out there. But maybe Roku might merit a little bit further attention of these names that are popping off after the bell. Let's go back around the horn. Mr. Meatball, sir, what do you keep an eye on for the rest of this week, at least until we can all gather here together on Volatility Views tomorrow?
Well, you've heard of the reflation trade. I'm wondering when we're going to have the recycle trade, and that is sell Peloton, buy SoulCycle. Because, if we do get COVID, a COVID cure, I think that is the recycle trade could be a huge winner. And so, I'm watching a bunch of earnings. I think watching elections still matter, I suppose, but not this one, apparently not that much. And really, I want to see with the S&P at 3,500, where to now? Is it going to make that run at 3,600? Or do they use this as kind of an area to start selling and maybe we sit here for a little bit?
Mr. Uncle Mike, same question for you. In addition to all that juicy Roku juice, what else are you looking at, sir?
3,500, like Mark said, in that this is kind of a high of where we were a few weeks ago. And it'll be interesting to see if this is going to form a double top or if this is going to pull back. So 3,500 is my focus at this point in time.
All right, everybody. Unfortunately, that music means we've come to the end of at least this leg of our options-oriented journey. But if you're listening live, and I see you guys all in there, you're welcome. Luigi, for answering your question out there. Stay tuned. We'll pump some fun stuff in between our shows. We'll be back in exactly half an hour. Do a deep dive into VolQ, what's going on from the CME side, what's going on from the NASDAQ side, get some actual practical traders' perspectives as well in terms of who's trading this thing. Should be a fun show. Stay tuned for that in exactly half an hour. If you have a question, why the heck are CME and NASDAQ getting into bed together on the volatility side of the space? Let's all find out together in about a half an hour. But before we go, let's go back around the horn. Let's start with the Uncleist of Mikes. Mr. Uncle Mike, sir, if folks are intrigued, and I can imagine in these days with these markets, they probably have some questions. Where should they go? What should they do, sir?
stcharleswealth.com if you want to learn more information about what I do. I'm a financial advisor that's not afraid of the option product.
There you go. Check him out, stcharleswealth.com. He ain't afraid of no options. Hit him up. Click on the Fox for fabulous prizes someday in the future. Not guaranteed. All right. And Mr. Meatball, sir, folks, maybe you want to hit you up deep down there in the heart of Texas to talk some options, some volatility, some VIX, maybe some Little John. How's this Little John thing going, sir? Tell us more.
Yeah, we did just launch Little John, which is our assistant to Robinhood trading. It's going well right now. It fired off 2 trades today, one in Fuel Cell, FCEL, and one in DraftKings, both of which are looking pretty good. And I put out free content every day on VIX, on trading, you name it. And, yesterday I actually spoke about our aforementioned NEO, which in options expiring tomorrow, yesterday traded 300,000 contracts. So, you're going to get little insights and information that you can use actionably on a daily basis.
Check them out, optionpit.com, and stay tuned for the launch of our forthcoming service, Friar Tuck, where we do what Little John does, which we just do like one contract more. Because, Friar Tuck, bit of a piggy, like to eat out there. So I
like Friar Tuck. I thought we were going to call it Maid Marian.
Well, there you go. Maybe she does a little bit less. She's not quite as piggish as Friar Tuck is. But if you want Robin Hood plus one more, or Little John was one more, stay tuned for Friar Tuck. I'm just kidding. We don't have a Friar Tuck, but you can check out Little John and all the other stuff over there in the realm of optionpit.com. And on behalf of the greasiest of meatballs and the uncleist of Mikes and our friends over there in NASDAQ and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for listening live, for leaving those reviews in your platform of choice. Keep them coming. Remember, if you're listening live, stay tuned. We'll be back in about exactly half an hour to give you all the fun stuff in the world of NASDAQ volatility. If you're listening after the fact, just hit next. And we'll see you back there, of course, tomorrow, Volatility Views, and then it all kicks off again on Monday with another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.